Hey everyone, Bitcoin finally broke above $80,000 and suddenly almost everyone turned super bullish again. Arthur Hayes even declared the beginning of a new bull run. But while some are already preparing for new all-time highs, others warn that this entire move is one huge trap and the next stop might not be $100,000 but $45,000. Meanwhile, Strategy didn't buy a single Bitcoin even though its massive position is finally profitable again. BITMINE, on the other hand, keeps swallowing Ethereum and is now dangerously close to its goal of controlling 5% of all ETH in circulation. And at the end, we'll take a look at what's happening with Solana and whether there is more fuel left after its latest strong rally. I'm Dimitar, you're watching Crypto Potato, and if you want to get the most important crypto news every day in a simple, understandable way, drop a like, leave a comment and subscribe with the bell. Let's get started. Bitcoin continues its impressive performance, climbing above $81,000 earlier today. We're still far from the all-time high, of course, but considering that just a month ago we were at $60,000, today's level is a massive jump. Ethereum stabilized around $2,500 after a fresh 3% increase in the past 24 hours, XRP moved above $1.50 and Solana jumped over $100 for the first time since February. We'll talk more about SOL toward the end of the video. Other well-performing altcoins today include Monero, Shiba Inu, Pepe, Internet Computer and BitTensor. Among the few in the red zone are Aave, Pump and Uniswap. The total crypto market cap climbed to $2.8 trillion. After such a rally, the logical question is whether we are finally witnessing the beginning of a new bull run. According to BitMEX co-founder Arthur Hayes, the answer is a firm yes. In his latest essay, he announced that the new bull market has already begun and that his investment fund Maelstrom has switched to maximum risk mode. Meaning Hayes isn't just hyping people on social media, he claims he's actually acting on it. His fund has significant exposure to Bitcoin, Ethereum and other cryptocurrencies, though the exact size of the positions isn't publicly known. The main reason for his optimism is the US Treasury's decision to double the maximum size of its buyback operations for longer-term government bonds, from $2 billion to at least $4 billion. The larger operations are set to begin on September 9th, and according to Hayes, they will increase dollar liquidity, reduce pressure on bond yields, and encourage investors to take on more risk. And when more free money starts circulating in the markets, Bitcoin is usually among the assets that benefit the most. However, that doesn't necessarily mean the Treasury's decision is the only reason for the rally. Spot Bitcoin ETFs attracted billions in recent days, the dollar weakened and massive short liquidations accelerated the move even further. There is also one more important detail. The larger buybacks haven't actually started yet, so for now the market is reacting mainly to expectations of future liquidity. Even Hayes admits that a new bull run doesn't mean the price will only go up. Serious corrections can happen along the way. Overall though, his position is clear. He believes 80,000 is not the end of this rally, but the beginning of a much bigger move. But against this super optimistic outlook stands a completely different theory. While Arthur Hayes sees the start of a new bull run, trader Non-Z claims the entire rally to 80,000 is a trap and that Bitcoin could crash all the way down to $45,000. According to him, this is not a real trend reversal but a temporary move driven mostly by liquidated bears and a fresh wave of greedy buyers. His argument begins with the massive number of liquidations. During the surge, over $3 billion in short positions were wiped out, more than half of which were in Bitcoin alone. When the price starts rising sharply, traders with short positions are forced to close them by buying, which pushes the price even higher, liquidates the next group of bears, and creates a snowball effect. Non-Z believes Trump's comments around the Clarity Act and the Treasury's decision simply lit the fuse. The short squeeze did the rest, and now late buyers are jumping in, afraid of missing a new bull run. According to him, this is exactly the phase where big players can gradually unload their positions onto newcomers. His scenario is, to put it mildly, unpleasant. He expects Bitcoin to first drop to 67,000, then head toward 55,000 and finally fall into the $45,000 to $48,000 zone. Non-Z also points out that the Fear and Greed Index has reached its highest level since the major crash last October, which may signal excessive euphoria. But there are arguments against his predictions as well. Open interest is rising more slowly than the price, meaning traders haven't rushed in recklessly with huge leverage. So we end up with two completely opposite viewpoints. Hayes sees liquidity as fuel for a new bull run, while Nonzi believes it created a temporary trap. Who's right will likely become clear soon when the larger buybacks actually begin. Let me know in the comments which scenario you believe in. Is this the start of something much bigger, or will the bears return in full force soon? While analysts argue whether Bitcoin is at the start of a new bull run or inside a massive trap, two of the most famous companies in the crypto world made completely different moves. Strategy didn't buy a single Bitcoin for another week, while BITMINE kept swallowing Ethereum and is now almost done with its extremely ambitious goal. Let's start with Strategy, which increased its dollar reserves by about $1.9 billion. The company added capital to its main reserve, bringing it to $5.1 billion, and created a separate cash position of $1.59 billion. It also bought back $136 million worth of STRC shares. This is the second consecutive week without Bitcoin purchases, but at least Strategy didn't sell any coins after selling 1,690 BTC earlier this month. The company still holds around 4% of all Bitcoin, and the average price of its massive position is roughly $75,400. Thanks to the latest rally, Strategy is back in the green, and its coins are now worth over $65 billion. This is a major turnaround, considering that just a few weeks ago the company was sitting on an unrealized loss of over $10 billion. While Michael Saylor is temporarily stacking dollars, BITMINE apparently doesn't know the meaning of the word rest. Tom Lee's company bought another 32,000 ETH last week and now holds nearly 5.85 million coins worth around $14.3 billion. That represents roughly 4.8% of all ETH in circulation and means BITMINE has completed 97% of its plan to control 5% of the entire supply. The company has also staked over 5 million ETH, which could generate around $330 million per year. Finally, let's look at what's happening with Solana. Sol's price jumped above $100 for the first time since February, and its market cap climbed to nearly $60 billion. The main catalyst is, of course, the general green wave across the crypto sector, but there is something else. Institutional interest in Solana has increased recently, with spot Solana ETFs accumulating over $33 million in the past day, the strongest inflow since last December. Many analysts now predict that SOL could shoot to $300 or even above $500, but be cautious of a potential correction. After all, the relative strength index has moved above 70, meaning SOL is in overbought territory, and historically that often signals a move downward. That's all for today, friends. If you found this interesting and useful, don't forget to leave a like and follow the channel. I'll see you again tomorrow. Until then, have a great and successful day.